With decentralized exchanges gained popularity, next panel will explore the role in the future of crypto trading, highlighting their advantages over centralized exchange and how they are evolving in terms of security, liquidity, and scalability. Let's welcome on stage CEO of DYDX Foundation, Charles DeHousie, and COO of Bloom, Anton Trobovskis, CMO of Orca, Ksenia Brazilian, and founder of Stormtrade, Dennis Vasin, and moderator and CEO of Coinape, Sunil Sharma. Thank you.
Wow. Just to check, guys, am I audible, everyone? Back at the backside? Can everyone hear us? So guys, excuse me, sorry for my throat. Just, having some cold. So in case if I'm not audible properly, just raise your hand, I will repeat it again, okay? But welcome to all the panelists here, all the speakers here. I mean, nobody can deny the role that DEXs are playing right now in the world of crypto. And this is an amazing panel to get your answers ready. How many of you have heard the recent stories that somebody made, let's say, $1 million starting with a $500? Let me assure you, these are not sexes. These are DEXes. Let me assure you there, okay? So this is a brilliant panel today here. All projects are live, and these guys are really making a difference in the world of crypto. So before I begin to drill them with our questions, with our, kind of investment advisors, but before that, let's, have a round of short introductions. Dennis, yeah, let's begin with you.
Okay, so I'm Dennis. I'm CEO and founder of Stormtrade. Currently, we are the leading perpetual DEX built on Tom blockchain, where you can access it through the Telegram mini app. So with over 5 million people in our community, we are one of the largest trading platforms currently on Tom. So yeah.
Hi everyone, I'm Ksenia. I'm CMO of Orca. We're the leading DEX on Solana and also one of the first protocols on Solana.
Yeah, hi guys, I'm Anton. I'm CEO at Bloom, I guess second biggest Telegram mini app right now, and we are building a decentralized trading infrastructure for traders.
Good afternoon, everyone. My name is Charles. I'm the CEO of the DYDX Foundation. DYDX is one of the OG decentralized exchange for perps. We recorded $1 trillion of trading volume in the first chapter of the history of DYDX on Ethereum, and we launched 1 year ago the DYDX chain, which recorded $225 billion of perps trading. Very excited to be here.
Hello everyone, myself Sunil Sharma. I'm CEO at Coinape Media. We are one of the largest websites for crypto information and news. So always check us out for any crypto-related updates. So let's directly dive into it, because of course we all have limited time here. But before we get into technical questions, before we get into exactly that how DEXs are competing with sexes, we want to first counter a question for an audience, for us as retail investors, that why DEXs? Why DEXs are so important, and what advantage do they give us over sexes? Why centralized exchanges, let's say, is not the future of crypto industry? Why DEXs are the future? So yeah, anybody can take it. Yeah. Yeah.
I guess crypto is an evolution of finance, and the stack of finance is evolving. The internet has evolved. The finance has not evolved so much so far. So what we are all doing, I believe, in the DEX industry is looking at what technology enabled us to do via smart contracts, via different chains, via business logics, and trying to reinvent and improve the distribution of crypto finance, and improve the efficiency overall of the rails, as well as the capital efficiency, making sure that the money can be at work in the most efficient manner.
Also I think we can't ignore regulatory structure and all the stuff that's happening in the world around sexes right now. So we can expect that moving forward, more and more people will come in trading on DEXs, because On centralized exchanges, the products would be more like traditional, I would say, maybe classic spot, maybe some stuff for institutionals, and it would be like a hub for onboarding Web2 audience and like giving them their first crypto. But the real fun still gonna happen on DEX, right?
Yeah, of course.
I agree with all the previous points, and especially with globalization, because I think this is where DEXes really shine compared to SEXes. Because basically what the DEXes have done really well is deleting the intermediary. So we don't have a middleman. That's why we can open the playground for more people. And obviously coming from the Solana blockchain, memes, trading, fun, so I can tap into that. But I think that where centralized exchanges are still better than decentralized exchanges is definitely the usability angle. The usability and onboarding, because this is one of the main challenges for any DEX out there now.
Well, I had the pleasure to attend Pavel Durov's speech at Token 2049 in Dubai, and he put a great emphasis on like why Telegram is here, is to give freedom, right? And I think DEXes are kind of in line with this. So DEXes give people a financial freedom to make their own financial decision, to trade what they want, to do what they want with their money. In addition to that, like ideological side, I would say, DEXes also enable a few things that SEXes just do not. For example, you can provide liquidity on DEXes. You can earn trading fees from this. On SEX, to become a market maker, you need to do like complex software, probably lots of money, so it's just more difficult. DEXes just make a lot of like complex things for the end user much simpler, more accessible.
Maybe to build on that, Sunil, if that's okay. I think the internet overall is evolving also. We used to have like one global layer of the internet via HTTP. But if you look carefully at how the world is starting to consume the internet, it's been changing quite a bit in the past years. And I think from the internet concept, we are evolving into the split internet. And eventually, we are seeing before our eyes different subsets of the internet popping up. People are using less and less Chrome to access the internet and more WeChat. The elephant in the room is Telegram. How many hours people spend on Telegram versus Chrome? Many, many more hours. So I think there is an opportunity for DEXes and DeFi in general to be much more efficient in terms of distribution of financial products. Instead of thinking like, I'm going to bring people to my shop, my .com or my .app, thinking like the internet, the Chinese on WeChat, the Japanese online, the Korean on Kakao, the global community of Telegram on Telegram and the Ton network. How the distribution of content, how the mind share and the eyeballs of people spend on. And this concept of split internet is very important, I think, for builders in the decentralized space to understand and to think, how can I essentially bring my product where the people are? Because the internet of yesterday and the internet of today is very different.
Understand. I mean, there's no denying that DEXes are seriously allowing us the true freedom that we call decentralization. But it brings us to, of course, the next question. You know, regulatory concerns. How many of you think that crypto is facing regulatory concerns right now? I hope anybody who was invested is facing this right now. So this, brings us to our next question. And the question is more about, since you guys are the leaders of this space right now, I mean, all those projects, you guys are actually, at the front line. So we would like to know, that how are these discussions going on with these regulators? I mean, is it the same like centralized exchanges, or are you seeing any difference in their approach to decentralized exchanges? Is there a difference, in the regulatory concerns, or is it the same with the SEX? Anybody can take, yeah. See, as an investor, we're just trying to understand from you guys, that what should we be prepared for?
I can go first, because I think, as I'm always on the marketing front, the testament to how much more legal we have is that this year was like the most time that I spent ever in my life speaking to the legal department. And I think especially with all the cases mounting and with SEC being like very heavily on the crypto case, legal is very important. But to be honest, I see it both as an advantage and disadvantage. in a way that I think there were quite a lot of different practices that were kind of distasteful in our space, especially from the promotional point of view. And now I see the space evolving a lot, and there are a lot of new people coming to it, so a lot of newbies that we kind of, as leaders in the space, we have to take care of them through proper onboarding and through also explaining what are the risks of the space. So I see legal from the business side kind of trying to drive this divide between sophisticated users who actually know what they're doing and they know the risks associated with crypto, and the newbie users who eventually need to be guided to the space and need to be explained. So I think there are both cons and pros side here.
Yeah, also I guess there is another risk of like further pressure from the regulators to DEXes, because of course they're not going to be happy of like unverified trading, unverified funds, etc. And like still I guess all of us can admit that the main advantage of a DEX is a self-custody, right? But anonymity is not as big advantage for regulators. And in my opinion, they will keep pushing, they will keep asking different exchanges to somehow verify the users, verify the transactions. And the big challenge is how you're gonna like keep the product as it was before and not get mixed with the centralized exchanges when you try to implement any like verification stuff and like KYT stuff. And that's going to be the next big challenge for DEXes, in my opinion.
The way I look at this, I think regulators are coming in different flavors. Depending which part of the world you engage with regulators, they will have different level of understanding, different agendas. So that's the first thing. The second thing is if you look carefully at DeFi, eventually there is a massive overlap between what DeFi delivers and what regulators want to achieve. Regulators want to have like a market which is healthy without bad actors, and DeFi offers you like total visibility on the marketplace, so you can basically see what's happening in on the marketplace versus a centralized exchange, which is essentially a black box. Regulators want also to ensure security of the funds of the users, and this is what you can achieve when you build properly DeFi. You can ensure that the funds of the users are segregated from the protocol itself, and it's just two different things, and you don't create a risk over there. So I think it's also a responsibility for us in the DeFi industry not to claim DeFi is better, but to demonstrate and to educate regulators, to make them understand, yes, we do things differently, but eventually you can achieve more if you work closely and spend the time to understand DeFi. You will get like a more healthy marketplace, you will get better protections of the consumer's assets and many other benefits of DeFi. And maybe my last point is, if you look at the history of technology and the history of the internet, back in the days when the internet came up in the 90s, late 90s, many regulators were thinking, we're gonna sue the internet. I want to see the CEO of the internet in my office tomorrow. That's enough. And it took them a few years to understand actually that the internet was a technology and you could not regulate the technology. But you could have a conversation and possibly craft some regulations for operators. So that's very important to kind of get this mapping of the industry. There is a technology, and then there is operator. And I foresee, this is what I foresee in the coming years, is possibly DeFi operators eventually approaching regulators and saying, okay, I am in this X, Z, or Y country, and I would like to follow the regulations of this country and provide access following the framework of regulations from that country to DeFi to my users. So I think the same way the internet is not regulated, but the operators of the internet are regulated. An internet service providers in France, in Russia, in Dubai, wherever it is, they all have different rules, right? And they have to kind of comply with the regulators. There is a high probability that eventually DeFi will be a technology only and considered as a technology by the regulators, and eventually the operators will engage with regulators to make them understand how it can be essentially providing access to users in a certain country in a certain way to DeFi.
So I guess, I mean, we are on the same page when I say that if FTX was a decentralized exchanges, at least investors would have had the self-custody of their funds, right? I mean, I'm not wrong when I say that the funds would have been with us only. We wouldn't have been waiting right now for some regulator or for some, centralized exchange to give us our money back. So I think that's one of the biggest advantages that we all can take away from here, that DEXes have self-custody where you own your own crypto, basically, Of course, you will have to manage the risk as well that comes with it. But yeah. So, let's come to the next question. I mean, with SEX or centralized exchanges, there is a very prevalent notion nowadays that the bigger players, they're basically exiting on the smaller players. I mean, institutions are coming in heavy, VCs are coming in heavy, and people like me or a retail investor gets, rugged at the end of the day because maybe we don't have the access to information, or maybe by the time we reach there to sell, there is no liquidity. So how are DEX, or the decentralized exchanges actually, kind of addressing this problem that there is no liquidity crisis on the exchange, and there is even an option to buy or sell for the last person that is coming on the exchange? Yeah.
Well, I think that especially for the assets with lower liquidity, as we all see this, like the whole meme coin money is mostly happen on decentralized exchanges, because on decentralized exchanges it's so easy to bootstrap liquidity, especially for the longer tail assets. And I think that the main challenge for decentralized exchanges right now is to actually match centralized exchanges, do a comparable slippage and market depth for really huge assets like Bitcoin and Ethereum. Because in decentralized exchanges, if we use something that's simple and well known, such as Uniswap, it's not very liquidity efficient. You need to put a lot of money in the pools and hence at risk of being hacked. And that's one of the problems with decentralized exchanges. While for the long tail assets, that's completely no problem, right? You can bootstrap your meme coin with a few thousand of bucks immediately, which you cannot do on centralized exchanges. What's really helpful is that with more advanced tech for decentralized exchanges, such as intent-based models, you can actually not only improve the efficiency of liquidity provision for DEXs, but you can also tap into the centralized exchanges liquidity through various intent-based models like one-inch fusion and so on and so forth. So actually a lot of decentralized exchanges liquidity-wise can now provide you with a very competitive slippage and market depth, because they both tap into the decentralized pools and to centralized exchanges liquidity as well.
I think it's a very good point in terms of the efficiency of liquidity, and it's quite interesting that in the DEX space, everyone is focusing more on the trading side, when each and every DEX has two sides, right? It's like a marketplace.
Right.
Eventually, the more liquidity you have on the platform, the more efficient it's going to be for traders, price-wise, quality-wise, and everything. So I think there are lots of measures that can be taken to incentivize liquidity and actually to foster having a very big and engaged community of liquidity providers to your platform. So I think this is one of the way forwards. Other things that majority of DEXs are working on is interoperability. So attracting more chains to your DEX, so having aggregated liquidity from multiple chains. And also working more on bridging better from one chain to the other.
Yeah, great point. I mean, interoperability is something that cannot be done with centralized exchanges. Yeah, great. Yeah.
Just to summarize what colleagues said, that I guess in terms of swaps, the problem of liquidity for at least retail users is more or less solved, And in my opinion, technology like RFQ, request for quote protocols, something what 1inch is doing, it's quite fine for retail users. But we're speaking about casual swaps. But what about perpetuals, like what guys at DEX are doing, Because for perps, you need way more liquidity for certain pairs, as we know. And that's when comes mixed model, when you have off-chain order book, on-chain settlement, casual market makers inside the order book, providing liquidity, providing orders, etc. And that's a way more interesting question, how you can handle this side of work, As I know, you guys at DEX doing fully decentralized perpetual trading right now, already done.
Yeah.
And I guess that's the base case on the market. and quite a complicated one. And
That's bold, yeah.
Yeah, so that's something would be interesting to listen to, actually.
Thank you, Anton. Yeah. So DYDX is in the business of perps since 2018. So we got a tremendous advantage to learn and do mistakes before many others for a very long period of time. So we end up now with a product which is much more mature. To come back to the long tail liquidity issue, DYDX launched over the past 12 months 100 new trading pairs via governance, and many of these trading pairs are long tail assets. So then you have two solutions. Either you find an incentive for market makers to come and provide liquidity, or you try to think how the technology can help and how your ecosystem can essentially be some kind of flywheel or virtuous circle. So what DYDX has experimented and launching in a few weeks will be a mega vault. So when users are trading on DYDX, they pay trading fees, and essentially 50% of these trading fees will potentially go and be redirected to a mega vault, and this mega vault will be automatically trading on the order book. So it's not an AMM, it's much more efficient, it's very well fitted for perps trading. So it's an order book with adjacent to it an a mega vault which will be trading and providing liquidity and assigning liquidity whenever there is a new meme coin, whenever there is a new FX trading pair, whenever there is a new RWA coming up. So, and the more people trade, the more this mega vault gets funded as well by the part of the fees of the users. So essentially, we hope that this flywheel, where the more people trade, the more part of the fees are essentially incorporated into systematic trading and market making on the ecosystem. Wow. Will be solving the liquidity huge, yeah, for the long tail assets. The vision of the DYDX is trade anything. And trade anything is a very exciting concept, but the execution of it can be a headache. So that's why we've got regular updates, because we find out, okay, people are coming with some coins they like, but bringing liquidity to these meme coins can be problematic. You need to have a large amount of liquidity in a very small amount of time, and maybe this meme coin will fade after a couple of weeks. So what do you do with this liquidity? How can you sign contracts or do anything for bringing liquidity? So we are experimenting this mega vault concept, which will be, as I said, fed in additional liquidity constantly by the protocol itself.
And basically, it will be serving for smaller orders, right?
Yes. That's a good point. There is an organic liquidity, I think, for all of us on the top 5 trading pairs. We don't need to support those trading pairs much. But then there is more of a challenge when if you think, okay, how do we design an unfair advantage for DeFi protocol? How do we differentiate ourselves from DEXes? And it's basically the pace of innovation, the pace of listings, the type of assets which you can list, and the next problem after this vision is execution and providing liquidity. So this mega vault is the latest experiment from DYDX, and we are very excited about it and very bullish on the results from it.
Sounds cool.
So one of the things, guys, we don't want you to take away this as a sex versus DEX war. This is not like that, you know. We are in the same industry. This is just about, providing the investor more options, right? This is more about basically categorizing investors to what they like. I mean, some may like to basically provide their data and have a custodian to hold their assets, while others may want more freedom around it, right? So this is not a war, this is all a collaboration, just to, not ignite a war on this panel. But coming to my last question, whenever somebody tries, a centralized exchange or a decentralized exchange, one common thing that they observe is which platform needs my data, which platform needs my KYC, which platform is asking me for more information about my financials. So how are DEX kind of, trying to navigate this? Are we seeing a future where we will be providing this information to DEX as well? Or is there some, middle way we are finding out around it? But how are we going to handle the privacy of the end user? Are we going to ask for KYC and AML there as well?
If you fall back to my view of the things, that the technology of DeFi is a technology, yeah, and operators might decide how they want to do things, you should not do any kind of KYC. You should do AML. You should be very, very cautious to keep your marketplace healthy. So AML is different from KYC. Yes. AML is essentially scanning the origins of the funds and making sure there is no questionable funds within your protocol. Mm-hmm. But KYC is probably something which doesn't make sense. If you're not very clear about your identity, are you a CeFi player? Are you a DeFi player? if you position yourself in the middle, it's like you're sitting between two chairs. You're going to fall. It's not going to fly.
Right.
So I think DYDX has been very opinionated, and the question came, and it was big debates, and it took us some time to really clarify like who we are, and it came very clearly eventually that we are a DeFi player. So we need to leverage the best technology available, but being very clear about how we're going to execute on this vision, and it will be via some DeFi rails. Identity of the project is hard. From a marketing perspective, from a user communication perspective, but I think it pays off if you do a clear cut.
Yeah, also I think that like over some time infrastructure regarding like identification of clients will grow and will adjust to decentralized manner. For example, I guess most of us know services like SamSap and Jumio and other guys that are doing KYC. And like how it works on centralized exchanges, basically user needs to upload to everything to text sending it to this provider, and they store the data. But maybe in future there'll be like some third-party service where user can verify itself and just have a token that he passed this verification. I know, in kind of an NFT or anything else, right? And like this token will contain metadata of, I don't know, his country of origin and some other stuff. And that's going to be enough for DEX to identify this client to know that he's not from United States or any super prohibited region. Yeah, that's kind of trade-off between like identification, anonymity, and meeting regulatory requirements, I would say.
Yeah.
I completely agree with everything that was said, and I think it's again another point to the regulations and like how they transform our space. But we can definitely be more creative, and as we come from technology background, we can employ different new technologies for that. I really like what ZK proofs are doing to the space, because I think it's amazing that you can still comply with the regulations, but at the same time you stay true to the ethos of DeFi. But definitely there are lots of things that we have to change now, and I think especially a lot of things that we do around the KYC depend on where the team is based. So as we all know, if most of your team is based in the US, you have to like be heavier on the compliance. So it definitely brings some new things.
Great. Dennis, yeah.
Well, I think it will depend on like the future development of the regulations for DEXes, because now it's pretty much unclear. However, I must say that in my opinion, both like the regulatory like technology and the DEX technology should evolve to accommodate like something new. So for example, like building on top of what Anton was saying, like probably like some kind of like zero knowledge proofs, like verifiable credential, like verifying like some facts about the end user, not necessarily his identity, verifying like the source of funds in like ML manner, instead of like providing like the exact documents. That's something that can maybe be seen as a future of like KYC and like related like compliance stuff for the DeFi.
Yeah, I mean, see, this panel here is all about, having some faces to these projects. Earlier in the 2017-16, the major crisis was there that there was no face to give that authenticity to a project, right? So first of all, I mean, personally, I'm really grateful that you guys are leading these projects and you're the face of it, right? That puts that investor trust there, and decentralized economy needs it, first of all, right? So a huge round of applause to all of these people, It takes huge risk, huge courage to come out here on such a public platform and represent these projects. Secondly, one last question. Let's, kind of make it fun as well. So we all love crypto predictions, right? So why not have a prediction from each of you that how is the market size or how is the DEX future looking like to you guys in the next 5 years? What are your predictions for decentralized exchanges in the next 5 years?
Maybe I can start.
You can be bold, yeah, of course.
I can start on the perp side. We focus on perps as we mentioned earlier. If you look at the spot market migrated away from CeFi to DeFi. So today, 15% of spot trading is on-chain. The perps market has not migrated so as fast as the spot market. So today, 5% of the perps trading is on-chain versus 95% on CeFi. So I think the big opportunity in the next 3 years probably is the accelerations of the migration away from CeFi to DeFi for the futures market. And keep in mind that the derivative market in crypto is 10 times bigger than spot. That's a very, very important market. This is where the price discovery, this is where a lot of actions is happening. So my prediction is that eventually the perp markets will catch up on the spot market in terms of migration away from CeFi to DeFi.
Wow, great. Yeah, Anton.
Actually, that was my prediction.
Great.
We'll do it together.
Yeah.
Exactly. We have a higher probability now, yeah.
Yeah. I'm pretty sure that like in coming 3 to 5 years, like DeFi perps markets will grow like rapidly. First of all, because like as Charles said, it takes time to migrate. It takes time to build infrastructure around DeFi for like more professional traders, let's say. Plus, like the pressure on CeFi and CEXes will grow, and like perpetual products will get lower, I would say, in terms of like leverages, in terms of a number of pairs, and in terms of like who can operate this perpetual trading on CeFi. So that's gonna be major like drivers for growth in perpetuals and DEXes.
Senia, yeah.
I actually side with the same opinion.
Wow.
So prior to
That's
Orca,
good.
One team.
Yeah. Prior to Orca, I've spent over a year in Web3 option space. So I see a lot more adoption now and like a lot more liquidity coming to that space. And many more TradFi traders and like TradFi institutions actually moving to DeFi because they find it more interesting or like more usable for them. But I think another prediction on the marketing point of view, actually making decentralized finance more seamless experience and having like an intuitive onboarding to it.
Well, obviously we are bullish on the whole DeFi thing because we are building DeFi, and we're already seeing this trend of like volumes, like especially spot volumes shifting from the CEXes to DEXes. I mean, nowadays I think DEXes volume are at all-time high, like compared to CEXes. So I would envision the whole DeFi sector growing around 10 times, like for the next 5 years, with significant shift of trading volumes from the centralized exchanges to decentralized, maybe to like even like 50-50, or even volume on decentralized exchanges actually surpassing the volume on the centralized.
Wow. So we are here, I know, we completed our time. Thanks a lot, guys. I mean, as I said, it takes immense courage and, to come on the stage to represent these projects and bring that investor trust. And I hope we all learned something about these net exchanges today. We learned that, yeah, CEXes are there to be, but yeah, DEXes are definitely taking a leap. And we all can put a bit more trust there and try it out at least once. Yeah. So thanks a lot, guys.
Thank you.
Thank you.
Appreciate it.
Yeah.